May, what is this ATO activity statement that says overdue? And what is PAYG installment? If you've ever asked this, let me explain in simple terms why you're getting ATO activity statement. If you earn income from your business or SMSF, a self-managed super fund, from last financial year, the ATO looks at your tax return and automatically calculates an estimate of your tax for the next year. What is PAYG installment? PAYG installment means pay as you go. Think of it like tax prepayment. You're paying your future tax in advance. When you're an employee, your employer deducts tax from your salary before you even get paid. That's why your payslip shows gross pay minus tax equals net pay. But as a business owner or SMSF trustee, no employer deducts tax for you. That's why the ATO asks you to pay installment directly. The goal is to prevent a huge tax bill at the end of the financial year by paying installments quarterly. You spread out the tax payments over the year. That way, come tax time, you've already paid a good chunk in advance and avoid a hefty surprise tax bill. Here is a lot, but I already paid all my ATO outstanding dues. And yes, you did, for last year. This statement is not about overdue tax from last year. It's about paying your current year's tax. If you miss the ATO due date, it will show as an overdue on your ATO portal. So remember, PAYG installment is like your employer withholding tax, except you're your own boss and you pay it directly. If you need help checking or varying your installment amount because your income changed, talk to your accountant so you don't overpay or underpay. If you're unsure why you receive an activity statement or need help managing your PAYG installment, reach out and let's review your ATO account together. Okay, May, but how does the ATO even come up with this PAYG installment amount? The basic formula, the ATO looks at your last lodged tax return. Example, in financial year 2024, your tax payable after credits was $10,000. The ATO assumes you earn about the same this year and spread that $10,000 into quarterly installments. So how much per quarter? 10,000 divided by 4 quarters equals to 2,500 per quarter. That means the ATO will issue an activity statement every quarter asking you to pay 2,500 as the prepayments toward your expected tax for the financial year 2025. Why this helps? This avoids a nasty 10,000 bill all at once at year end. Instead, you've already paid 10,000 in installment through the year. And when you lodge your tax return, any overpayments will be refunded or any shortfall will be added. Any change? Yes, if your business income this year is lower or higher, you can vary your installment with the ATO. The goal is to make sure you're paying tax close to what you actually owe, not overpaying. So when you see that ATO activity statement for 2,500, it's not a new random tax. It's just the ATO spreading the last year 10,000 tax into a quarterly repayments for this year. If your income changes, talk to your accountant so you can adjust it.